real estate has been the best performing asset in the past 40 years, while interest rates have been going down and the money supply has grown in every country in the world. So what happens when the opposite happens? Interest rates lately have been raised faster than any other time in US history. And now the money supply in America is contracting at the fastest rate since 1929. Are we headed for another 1929 stock market crash or a Great Depression 2.0 like so many people are calling for? Will this be bad for real estate? Well, the answer to those questions might actually surprise you. Let's begin unpacking this mystery by looking at the three factors that could help explain what's going to come next. The first factor that might help America and the American real estate markets sidestep these worrying economic signs is immigration. The U.S. still has record-breaking levels of immigration today, which was something America didn't have working in its favor in the 1920s. Immigration into the United States right now is borderline invasion levels, or so they say. America also has legal immigration at record highs, and this is expected to keep rising over the coming years and even the coming decades. There are currently nearly 50 million documented immigrants in the U.S., which is driving up the demand for housing, especially in urban areas. They're going to new heights. And that's just legal immigration alone, not factoring in the undocumented that are coming across the southern border in droves. I mean, let's talk about illegal immigration. It's definitely harder to calculate due to the nature of it being illegal, but we do have enough data and clarity to know it's also at record levels. Regardless of what you think of the Biden administration, what is factually true is that open borders has led to illegal immigration in record levels. Again, this is not political. This is just using reality to analyze the demand side of an equation. Border crossings, as we have seen in the media, have risen to a ridiculous level, with the Biden administration essentially having our southern border open per their policies. There have been over 2.5 million incursions between border agents and immigrants attempting to cross the border. So how many didn't they run into? They will all need a place to stay here in America. It is estimated that over 7 million people have made it into the United States from the southern border in 2023 alone, which is an absolutely staggering number. That's over 20,000 people per day. Because of this, there is an unprecedented amount of demand for real estate. Housing, essentially, both legal and illegal immigration are at all-time highs. Now, no matter who you are, where you're from, your religion, gender, ethnicity, etc., you're going to need a place to live. That is one of the most primal human instincts behind food and water. And as we said at the beginning, since housing is a non-negotiable need for every single one of those immigrants, regardless of their background, this has and will only continue to create more demand for housing. The more people living and working in America will increase the amount of money chasing real estate, which is a great thing for real estate owners and investors. Let's look at the second major contributing factor for why we may not see a housing market crash like we did in the 30s, and this has to do with interest rates. With interest rates being raised so aggressively, many people are deciding not to move from one house to another. And this makes sense, right? I mean, why would you move houses if you're locked in on a 30-year mortgage at under 4%, which they estimate 70% of the nation is either under 4% or paid off? And this is because the federal funds rate has been increased quite significantly over the last few years, from 0.1% to 5.33%. This has forced banks to increase the interest rates for new mortgages to a high of 8%, which is a 20-year high. We can see that 70% of mortgages are on a fixed rate, which means people are incredibly disincentivized to get rid of their 4% loan for an 8% loan. If you moved and consequently had to get a new mortgage at 8%, your monthly payment could easily double what you're paying today in your current home. The reason no one is selling their home all comes down to basic math. The fact is that it's incredibly uneconomical to sell your house if you have a loan. Combine that with the fact that immigration is reaching record highs that has led us perfectly to the third factor. The third factor is there is a significant undersupply of housing in the market at the moment. We are seeing the amount of inventory on the markets continue to shrink, and the amount of active listings shrinking also. Year over year, they've done that for the last 15 years in a row. We are also seeing massive demand and low supply through the lens that the median days on market that a house spends is shrinking. It's decreased from around 80 days in 2017 to under 40 days in 2023. So while it's true the money supply is shrinking at the fastest rate in history, and it's true that a major driving factor of real estate prices is the expansion of the money supply, these economic measures have not affected housing prices in any way that the Fed had probably hoped. In fact, despite all of this, real estate prices have recently risen, as has nearly every market over the last 6 months, which leaves the Fed in a very precarious situation. Obviously, the real estate market is not just one market. It's a market made up of thousands of smaller markets based on property type, location, demographic, etc. However, to give you some examples of the increase of real estate prices despite the shrinking money supply, here are some. New York. Prices here are at a record high. Texas real estate prices are also at a record high. We can see the same thing is happening in Florida, Michigan, Arizona. You name it, almost every state has seen their prices go through the roof, including California, the place that everybody seems to be moving from. As you can tell, these are not cherry-picked states. This data is true for the entire nation. The average median housing price increased from roughly $400,000 to $450,000 over the last year. And we can see from this colorful chart that every market is rising. So despite the increase of interest rates, which is driving the historic contraction of the monetary supply, real estate may not crash like many people are predicting it will. True to history, real estate continues to be a fantastic investment due to the reasons we just mentioned in this video. Now, this is only a brief overlook of the real estate market, but if you want to dive in deeper and learn more about what I think are the 5 best states you should be investing in for 2024 in America, make sure you watch our recent video we recorded on that topic. I will put a link on the screen that will take you straight to that video right here. Let me know in the comments down below what you think the market will do next. And if you like this video, make sure you subscribe for more great content like this. Thanks for watching, and I'll see you in the next video.